Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is October 23rd, 2016. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. Your stock market uptrend is still under pressure. My action and trades last week, I bought a few more stocks. I'm currently long the leading stocks with a partial position. Let's take a look at the indices. German DAX index right now is above 50-day moving average. Looks like it may have a potential to break above this little trading range and go up. We should wait and see. Nasdaq is still struggling around 50-day moving average. It may have a potential to go up. We don't know yet. Friday, it actually closed above 50-day moving average, 52.57. That's a close price. 52.50. That's a 50-day moving average. So Friday closing is above 50-day moving average. That's encouraging. SP 500 continues struggling below the 50-day moving average. It's been below 50-day moving average for a long time. So SP 500 is much weaker than the Nasdaq. Gold is trying to find support around 200-day moving average. It's not sure if it can find support or not. Looks like gold is in the pulse of a downtrend. Gold is in a downtrend right now. It's making a pulse here, so we're not optimistic that gold will turn up. Looks like it may just continue to go down. Even if it rebound, then we will have resistance around the 50-day moving average right here. If the gold will rebound here, we don't know whether it will rebound or not. It's hard to tell right now. It's just consolidating in the middle of the downtrend. Same thing with the silver. Silver is consolidating in the middle of the downtrend. Gold mining stock ETF, this GDX actually rebounded, but now it's near 30-day moving average. It could be a resistance here. So next leg, it could go down. Or it could continue bounce back a little bit more, which will meet 50-day moving average. That's definitely a strong resistance because in this downtrend, you can see every time it hits 50-day moving average, it invite more seller, so it will just keep going down. Crude oil is in uptrend, so it's a broke previous high here is now going up. USO crude oil ETF, this is a little bit of downtrend here. Looks like not clear, so it's not like a crude oil index. It's a clear uptrend here. Very strange. USO looks like it didn't meet the previous high, so very strange. Either the USO has to be consistent with the indices, or there's something going on that's not being reflected on the indices index yet. Energy ETF, it's still in this slow going uptrend, but pretty much in the trading range. But this slope is a little bit going up. China Asia looked like it's finished the job here. Now it's going up. It's above 50-day moving average. So if you draw a line here, this is also the uptrend slope, but it's just oscillating around 50-day moving average here. FXI is the China ETF of the big companies. This one is below 50-day moving average. We have to see whether FXI can go up from here. If it does not, if it continues dropping, especially if FXI drop below $36.81, which is the support here, that would be bad. That can drag down the A-share because FXI is the large cap stocks. Those are the companies that leading the China stock market. IBB is a biotech, US biotech downtrend. US real estate downtrend, although it rebound from 200-day moving average, but the overall trend is going down now. That's a real estate downtrend. Airline is actually going up. Airline has a break here going up. That might be an indication crude oil might come down, because airline tend to go the reverse direction with the crude oil. Semiconductor finds support around 50-day moving average and slowly going up, but we have to be cautious with here. It cannot drop below 50-day moving average again. If it does, then we may see a trend reversal of the semiconductor. But if it continue going up above the 50-day, which is $66.86, if it can hold this 50-day moving average, then semiconductor has right now would be a very good opportunity to accumulate the position. Actually, the strategy of trading this kind of ETF, which is finding support around 50-day moving averages, you can buy now, but have a stop order of this low, which is $60.06. Your stop order should be a little bit below this, say like a $65.90 or something. So a little bit below this low, and that would be the stop. What that means, if the stock drop below the support here, then that means the rebound has failed, then you get out. Otherwise, if the rebound continue hold this low, then you can continue hold that stock. Social media ETF, now it's closing below 50-day moving average. That's not a good thing. It hasn't found support on the 50-day moving average yet, but we can watch for it. We can watch this ETF. If it can find support going above 50-day moving average, that would be a buy point. So now you can have a buy stop order to buy. That means if it go above $24.29, then you can buy. If it not continue go down, then that buy order never triggered. You don't buy a stock when it's in the middle going down. You buy the stock when they rebound to the upside. That's when you buy. So solar downtrend. XLF is a financial, it's consolidating. It's not going anywhere. Utility downtrend. So we have lots of ETFs. Some sectors are going in a downtrend. Very few sectors are going in an uptrend. We have stocks to watch. Those are the leading stocks. The first list of the stocks are leading stocks in the buy range. So-called buy range is you have to understand the base and breakout. So the stock make a base, whether it's a cup with a handle base and flat base, whatever base. After it finished making a base, it will have a breakout. That breakout pivotal point, that is a trigger point to buy the stock. And anywhere from the breakout pivotal point to the 5% above that pivotal point, that's a buy range. If the stock price is within that buy range, then you can buy. But if a stock price above that 5% of the breakout pivotal point, that stock become too extended. Then you have to wait for the next buy opportunity. That's the way how we operate here. So on the stocks, those are the very strong stocks, means they have a very good earning and fundamental. And those are stocks, they have a good, strong fundamental, and then they're within the buy range of the breakout pivotal point, 5%, within 5% the pivotal point. So they're in the buy range. And ABMD, that's a stock, and Alibaba is a one, Edward Life Science, Facebook, and PXD, this is a natural resource stock. You know, those stocks are in all different sectors. And then there's a leading stocks extended, and those are the list. And I'm gonna show the chart later on. And then the third list would be stock on the watch list. Those stocks, and some of them have already broken out from a base. Some of them are still within the buy range. Some of them are pulling back to 50-day moving average. The reason why they're in a watch list is because they have not shown, the stock in the watch list, it does not mean you cannot buy them. but they're not, they haven't get into the category of the stocks, the leading stock list yet. Their fundamental may not be as strong as the other two lists, but they're pretty strong, and it's up to you basically whether you want to allocate fund to buy the stocks on the third list or not. But stocks on the first list, that's the first choice. Okay, let's take a look. And those are this first list of stocks in the buy range, the leading stocks in the buy range. ABMD, pullback within 50-day moving average. So this is a buy opportunity, but you can put a stop. If you buy here, you can put a stop a little bit below that 50-day moving average. Or you can wait until they have a rebound day with a high volume, such as this one. This is a dropping below 50-day moving average, but quickly close above 50-day moving average. And the volume is decent. It's not great, but it's okay. Or this one is definitely clear signal, high volume, pulling above 50-day moving average. That's a buy signal. You can wait for that, or you can buy now, but with a stop order a little bit below this, just in case if it drop below 50-day, then you get out. Alibaba definitely finds support around 50-day moving average. This is a strong signal. This is a closing on the high end of that range that day. So now it's buyable. And again, you put a stop around $99, a little bit below $99. Edward Life Science finds support, 50-day moving average. So these few days looks like it's already find support. It's closing above 50-day moving average, which is here, $117.21. It's have several days closing above 50-day moving average, so it's currently buyable. And Facebook definitely finds support around 50-day moving average. Here, Facebook is now even breakout from this flat base. So this is a little flat base. It used to be this base breakout. Now it's a second base breakout. So Facebook is buyable right now. Google breakout from this flat base. So on this day, that's a Tuesday. Yeah, that's a Tuesday, a breakout already. So Google is buyable as well. NVIDIA find support at around 50-day moving average. So NVIDIA is in the buy range. PXD, Pioneer Natural Resource, this breakout from this range. So it's in the buy range. Now, third list, those are the stocks to extended. Amazon to extended. But Amazon right now, it's maybe pulling back toward 50-day moving average. So we should wait. 50-day moving average is $794. So not quite clear on Thursday that would be the one or not. It looks like it might be. So it may move around the 50-day moving average for a little while. So as soon as if we get a clear rebound day with a high volume, that would be a day to buy. Domino Pizza, DPZ, this one is too extended. And last week it was around 50-day moving average, but it gap up and now it's too extended. Nowhere to buy now. Grubhub is bouncing off 50-day moving average now. So this is a good stock actually. NetEase too high, no buy point. Weibo, this is another Chinese internet stock, too high, no buy point. It's drifting. It may be meet 50-day moving average. Then we will see if it can bounce back up or not. Looks like it's drifting down now. Now the third list. This is the list on the watch list. If you have extra fund, want to invest in this, is totally fine. Otherwise, and the first choice will be the first list. Activation, ATV, this is a gaming company, and rebound from 50-day moving average. This is a fine support here. Eli Lilly, no, sorry, this is Ellie Mae, not Eli Lilly, sorry, ELLI. Ellie Mae, this is one fine support around 50-day moving average. GKOS, that's another biotech. They make something related to the heart. They make the medical equipment related to the heart surgery. Anyhow, this one is also trying to find support around 50-day moving average. And Paycom Software, and this one is around 50-day moving average. So Tata Motors, this is an Indian company. They make tractors, and around 50-day moving averages. So those are all the buy points around 50-day moving average. I also list earning. Some stocks is about to report earning, like ABMD is going to report earning on Thursday before market open, and Edward Life Science earning on Tuesday, and Amazon earning on Thursday, and Ellie Mae, ELLI, earning on October 27th. So if you long a stock, it's better to keep track the date when the stock is about to report earning. And their strategy is to play with earning. And my favorite would be replace the long position with a call option. So basically buy option. That way you can reduce the potential loss. Or another strategy will be sell part of the position. So such as if you sell half of it, another half can still enjoy the gain. This is to protect you from the potential drop. If you have a lot of profit in that stock, of course you can continue to hold on to it. You have a cushion. You have a, say if you already have 20% of gain of the stock, if you hold on to the full position, in case if it drops another 10% is not too bad, you can still get out. But if you don't have a profit, usually it's better to sell part of that position before the earnings, such as half or at least 1/3 of the position, so that if in case the earning is bad, then the stock doesn't, you don't have too much of loss. But on the other hand, you don't want to sell all the positions because a lot of times earning can be very good. The stock can gap up. If you sell completely, then you're watching the stock go up without you. So that's also a risk. And so that's why you need to know. I mean, I usually keep a track of the earning date if I long the stocks. Anyhow, what to do in the current market? Current market is an uptrend under pressure. We can long the strong stocks. As you see, some of the stocks perform much better than the index. We can still long them, but with a reduced position, we don't want to long 100% of the portfolio. We probably put maybe 50% of the portfolio into long the strong stocks. For every long position, always have a stop order. In case the stock goes down, we get out. That's all for this week. Please subscribe to my YouTube channel here. When you listen to the video from the YouTube, here's a subscribe button. You can click on it and subscribe. That way will help me to keep track of my video and how many people watch, and then I will get some statistics, and also just help me manage my video. Thank you very much. See you next week.